I'm Jim Bianco, and this is Real Visionaries. I started Bianco Research in the summer of 1998, so it's roughly 23 years old. But I guess I got to back up before that and say that I graduated from school in the mid-1980s, and I worked in New York on Wall Street for most of that period. And in 1990, I went back to my hometown of Chicago, and I worked for a firm called Arbor Trading Group, and I was the director of research for 8 years. And then in the summer of 98, they decided to change their name to Arbor Research and Trading and spin me off as my own research organization. So that's when I began the company. My job is basically research. Arbor is my marketing and technology partner. They're a bond brokerage firm that deals with institutional clients worldwide. There was a number of people that helped me in the business. I go back to when I was an undergrad. Dr. Bill Landis, who I took a class on options trading with. He eventually became a managing director at Putnam in Boston several years later. I got the chance when I worked in New York at First Boston to work for a great technical analyst named Joe Generalis, and he taught me a lot about the business of trading and markets as well too. And then when I moved over to Arbor for those 8 years, the head of Arbor, who eventually became a close friend of my business partner, Jim Stevens, he also helped to teach me a lot about the business. But the great thing that happened, especially when I got to Arbor, was I got to experience some openness and some creativity. The problem with Wall Street is they take everybody and they silo you. They say, okay, you are the junior technology analyst, or you are the senior macro strategist, or you are the emerging market economist. Don't you color outside those lines. By giving me the flexibility to color it whatever lines I wanted to, I was able to, over the years, figure out what I thought was important, what I think other people should be aware of, and structure what I talk about and what I do in that direction. The market trends I tend to want to focus on are the market trends that most people are not appreciating or overappreciate. So, for instance, the big one that I've been focused on most of this year has been that inflation is going to be a bigger problem than we think. Now, that's becoming a conventional thought in the last 30 days or so, but it wasn't earlier this year. The word transitory was a big one. So those are some of the more recent market trends that I'll be looking at. Another market trend is on interest rates, which somewhat is related to inflation and which way interest rates are going to help go. And I happen to think that they're going to go higher. So a lot of these trends that I'm looking at are what people are not really focused on and should. For instance, what's happened with value versus growth? A lot of people think that either value is great or growth is great, but they didn't realize what's been going on. So when I talk to Rob Arnott, he says that value had its worst period in history in the last 10 years.
The marketplace embraces the notion that tech provides the new nirvana and that tech companies will dominate the world. Of course, they're brilliant disruptors, but disruptors get disrupted and people forget that.
The greats of like Warren Buffett and the like have always talked about the virtues of buying value. Never has there been a worse time to do it than, say, the last 10 years or so. And Rob, says that he thinks that might be turning and that might be moving higher. And I thought that was an important issue to bring up, to people understand what's been going on between value and growth, because it's a major idea. I'm either a growth stock investor, which is code for technology, or I'm a value stock investor. Another big sector that I've really been fascinated with is the financial stocks and the bank stocks. They have been arguably the worst performing sector of the last couple of decades. Careers on Wall Street have ended because people have had this adherence to banks are great, banks are cheap, and they have been for decades, and they continue to be. So I talked to Marc Rubinstein. when we talked, he says that, yes, that's the case, that banks have been very poor investments.
So interest rates have been going down, as you know better than me, for a long period of time. Pre-crisis, banks compensated for that by increasing their leverage.
And moving forward from here, they have a new set of challenges. I thought the most interesting thing you'll hear him say is, in the past, pre-2008, we used to always hear stories about rogue traders blowing up on Wall Street. You know, Nick Leeson loses $1 billion for Barings and all of that. And that all ended in 2008. Why? Because the banks have always been under pressure because they're not very good at innovation. And they've tried to make it up by leveraging themselves and taking oversized market bets and telling the traders on their trading desks, shoot for the moon, man. And sometimes they blew up spectacularly. That ended in 2008. And then you heard a lot of people say, well, the banks have never been more well capitalized now than they've ever been, and they've reined in the leverage. True and true. But what they're doing now, they're still under intense pressure from innovation and change. Now they're taking operational risk. So instead of the banks winding up having rogue traders, Marc tells us that what you hear left and right is that they're winding up getting fined for money laundering and getting fined for taking all these risks in their business line. I'm not saying banks are immoral. What I am saying is they're under such intense pressure, they have to push the limits all the time in order to compete. And sometimes they kind of go a little too far. Another topic that I've been very interested in is what drives markets up and down. And Dr. Ben Hunt has been doing some pioneering work in the idea of themes and narratives in the market.
It's in those moments, those jarring moments, when reality and the narrative are at odds, that big things happen.
And that we need to understand that sometimes it's not about, I need to understand how to dissect a balance sheet or understand the seventh level of an income statement, or to have a certified market technician's degree to understand how to read a chart. But maybe what do people talk about the themes, and what are the narratives that they bring up? And he tells us some great stuff about how themes and narratives work in markets. And by the way, that word narrative, I think, came up in every interview that I talked about, that everybody, whether it was Rob Arnott or it was Marc, that they talked about the importance of the narrative. Yeah, you could tell me the numbers and you could tell me everything else, but if everybody's all excited about something, it goes. And if everybody hates something, it doesn't go. And then finally, I've fallen down the crypto rabbit hole, and I'm a firm believer that what we're seeing is epic change is coming, and it's going to be as big and as important as the internet itself. I talked to Dr. Campbell Harvey at Duke University. He's a traditional financial guy.
Many central banks are scrambling to do this because they see that there's competition. And the competition is the decentralized cryptocurrencies. Cam
is famous for his dissertation in the 1980s that said that the yield curve leads recessions. So he's like me. He's a TradFi guy, as we call ourselves. And he's of like mind, that we are looking forward to some epic change in the ways of decentralized finance and cryptocurrencies, and if I might add, Web 3.0. So I didn't want to talk to another crypto guy. I wanted somebody that was grounded like me in the traditional world to say, I see what can be and I see what could come. And so Cam told us a lot about what he sees incoming in the crypto world, and it's quite exciting. And in addition to that, he tells us about the yield curve and about how economists are working with their backtesting models, and Wall Street as well too. So we then got back into more of our bailiwick of more traditional financial stuff. As the end of the year comes, what the tradition on Wall Street is, you get these reports, the 10 things to look for in 2022, my forecast for the following year, what I think are going to be the biggest surprises. And I think it's important that all investors read every one of those. And all investors collectively say, now I know what's not going to happen next year. Because the fact that everybody agrees on that tells you that it's in the price. In our interviews, you'll hear a couple of people like Rob Arnott says that too. This is in the price. And so you want to look to say, okay, what is it that we're not talking about that might become a very big issue? As we're sitting here in the second half of the year, nobody said the word supply chain in the first half of the year. Nobody talked about the idea of shortages in the first half of the year. Nobody's 10 surprises for 2021 was to actually get goods from China to the shelf so you can buy it was going to prove to be a huge problem, yet it is. And so something like that will happen in 2022. And the question is, what are those ideas going to be? Now, I don't know yet what they're going to be, but that's always what I'm trying to think about is what's the next thing that no one's talking about?